Hey yo, good evening viewers of YouTube. My name is Tyler of Chico Crypto, and you know what time it is. It's time to get a buzz and learn some crypto in the one and only crypto, and of course, a cold one. Today's featured brewski is supplied by Chico Army member Dirk. Again, it's out of Germany, Bolten I think. It's called Bolten's Landbier, and it was brewed in 1266 it looks like. That's a joke. Probably not. Let's get in this. Pretty fucking good. Bitcoin futures, they were introduced early this year and were hailed as an investment vehicle that would legitimize cryptocurrency. Just look at Reddit posts from 11 months ago when they were first getting launched. People saying it legitimizes Bitcoin as an entirely new asset. To the moon, and the floodgates begin to open. People were obviously stoked about futures. But should we really be that excited? First, what is a future? Futures are an agreement to buy or sell an asset on a specific date at a specific price. Once the futures contract has been entered, both parties have to buy and sell at an agreed upon price, no matter what the actual market price is on the contract execution date. The goal of the futures is supposed to be a risk management tool for investors, used in financial markets to hedge against the risk of changing prices of assets that are bought and sold on a regular basis. With Bitcoin futures, the contract is based on the price of Bitcoin, and speculators can place a bet on what they believe the price of the Bitcoin will be in the future. Here is the kicker. It enables investors the ability to speculate on the price of Bitcoin without actually having to own any at all. Now, the Chicago Board Options Exchange, or CBOE, was the first to launch futures contracts. They launched on December 10th, 2017. And in the short term, yes, Bitcoin spiked almost 10% in one day to a price of over $17,000 USD. Then the Chicago Mercantile Exchange, or CME, one of the largest financial and commodity derivative exchanges, launched their own futures on December 17th, 2017. The price of Bitcoin rose in anticipation from the date of the CBOE futures, reaching the all-time high of Bitcoin on the 17th, the day the futures began trading on the CME exchange. We all know what happened after. Bitcoin and the crypto markets have been wrecked. Let us zoom out a bit and see what the carnage has been. Going from over 20K per BTC to under 4K where we sit right now. What the fuck, futures market? I thought this was supposed to legitimize cryptocurrency and bring in a whole new wave of investors. Well, that isn't a false statement. It has brought in a bunch of new investors, but not the bullish type like we were expecting. These are rich motherfuckers who saw Bitcoin and crypto as a threat to the financial stability of fiat banks and our grandfathered in economic system. What do you mean, Chico? They are actively suppressing the price of crypto? Yes they are, and to understand the reasons of why, we need to understand what has happened with other commodities who have been viewed as a threat. The deregulation of the financial systems during the Clinton and George Bush regimens in the United States has had predictable results: financial concentration and reckless behavior. Banks grew so large the financial authorities declared them too big to fail. These banks have become wards of the government. They require massive creation of new money by the feds in order to support the large-scale asset purchases of government bonds and other financial assets to keep the economy alive and stimulated. If you didn't know, the Federal Reserve has been monetizing $1 trillion of bonds annually. These bonds are being purchased with fake money that was printed with the sole purpose of purchasing these bonds, which keep interest rates artificially and exceptionally low. This naturally was putting pressure on the value of the US dollar, the value of which was declining in terms of gold. If we look at this chart, we see that gold was at its all-time high versus the dollar in 2011. Gold is the blue line and the US dollar is the orange line. Around this same time, the Federal Reserve realized that if gold hit $2,000 per ounce, it could have a psychological impact that would spread into the dollar's exchange rate with other currencies, resulting in a run on the dollar. They could not allow this to happen, and gold futures were launched in 2011 by guess who? None other than CME through its COMEX subsidiary. They are the largest trading exchange for future contracts of gold. The Fed's gold manipulation operation involves exerting forceful downward pressure on the price of gold by short selling massive amounts of COMEX gold futures. Futures of gold are like paper gold. They represent one gold 100-ounce bar, and if a buyer of the future decides to ask for a delivery of the gold, they should be able to. This is not the case, as they are creating naked contracts. Contracts being sold without any underlying physical gold. How do we know this? On Monday, January 6, 2014, the gold price rallied $15 in the Asian and European markets. In the space of less than 60 seconds, more than 12,000 contracts traded, 10% of the day's entire volume. In 60 seconds, the price plunged $35. There was no news or market event that would have triggered the sudden massive increase in COMEX futures selling, which caused the sudden drop. These 12,000 contracts means 1.2 million ounces of gold, an amount that exceeds by factor of 3 the total amount of gold in the COMEX vaults. They printed gold to push the price down. Here is the price of gold since futures started trading in 2011. It's obvious there is active suppression of gold's price by central banks and the Feds by printing gold through futures contracts. Now, how do we know this? The gold vaults of the Federal Reserve, Bank of England, European Central Bank, and private bullion banks like JP Morgan Chase are depleted. This depletion became a problem when Venezuela was the first country to ask for its gold being held by foreign central banks in 2011. Which they are still fighting to get all of it back to this day, as seen in this article. Venezuela really wants its $550 million in gold from the Bank of England. Then in 2013, Germany made a similar request, but instead had to strike a 7-year deal where only 300 tons of its 1,500 tons of gold would be delivered over this period. It's obvious they don't have the physical gold. Now, any other commodity that is seen as another store of value besides the dollar has had futures markets launched against it. For example, the silver futures market launched by CME around the same time as gold. The price of silver was growing up until 2011, then a crash down. How about uranium and its price? Uranium was shooting up until 2007 when CME launched futures contracts against that asset. And since 2007, the price has crashed. Just look what CME Group's chairman, Leo Melamed, said about Bitcoin in November of 2017, before the futures launched. We will regulate, make Bitcoin not wild, nor wilder. We'll tame it into a regular type instrument of trade with rules. They have tamed it all right, just like gold, silver, and uranium. It would be one thing if these futures were physically backed by Bitcoin, but guess what? They are all backed by cash and settled in cash, which of course we know is being printed all willy-nilly by our government. This is a paper Ponzi scheme, and any of these investors we thought would be buying into the market is actually just buying into cash. Therefore, any money invested into these futures is diverted away from the spot market and reduces Bitcoin's demand and price long term. CME and the CBOE have been printing Bitcoin at will on the back of the printed US dollar and stealing from everyone else in the world that holds Bitcoin or any other altcoin. This is not good for Bitcoin long term, I can tell you that right now, and it's big boys' attempt to destroy Bitcoin. We need physically backed futures and physically backed ETFs, as proving the reserves would be as simple as a public key. The government is not going to allow any sort of Bitcoin-backed financial instrument to be approved, since that would cause Bitcoin to gain too much value and threaten USD's dominance. Bakkt got delayed when it was supposed to go live in December, but now it's in January of this year. I wonder why. These are supposed to be Bitcoin-settled futures, but don't be surprised that when they do come, they are cash-settled futures. I pray to the crypto gods they can pull it off, but our government doesn't let a USD rival succeed without a long, drawn-out fight. Cheers, viewers, and I'll see you next time.